Hi, it's Neil O'Brien, and it's finance topic 5, how to get paid quickly. And this is another key one. And I know I could be accused of saying that about a lot of the topics, but it really is. A lot of businesses that fail, that go bust, one of the main reasons they do so is that they run out of money. And one of the main reasons they run out of money is that they're poor at getting paid, at collecting the money that's owed to them. So these are businesses that do a job like a service, engineer, accountant, marketing firms, all these companies do a job, they invoice, and they have to give credit terms of 30 days. Well, most do give credit terms of 30 days. So it's not a cash business, and not getting paid is a huge challenge for them. Now, there's an old saying, the squeaky wheel gets the oil, and that wheel looks like it hasn't seen oil for a while. I'll come back to that saying because it's very relevant in terms of getting paid and chasing money, how things work. Now, my definition of a customer is someone who pays you for your service when you want to be paid. So if you deliver a service and say you have 30 days credit, somebody decides to pay you after 60 days or 90 days, which unfortunately is quite common, then they're in control of when the money is being paid. Whereas as distinct from you being in control of it. And systems, having good systems in place can help make sure you get paid when you want to be paid. Payment terms are so important. A lot of people in business are just so happy to get the sale that they don't think about payment terms. They don't discuss them, especially with a new client. For example, there's companies out there, large multinationals, large drinks firms, and so on, and they will pay you after 60 days or 90 days. Now, if you're expecting to get paid after 30 days and you have bills to pay, you're going to be disappointed, which is why it's so important to discuss payment terms. And even though they have payment terms, it doesn't mean that you can't get paid sooner if you go and ask, okay? Ask. And with new clients, you don't know them, there's no credit history. I think it's quite acceptable and quite right if you want to get paid upfront when you have new clients until they build up a credit history. Like, why are they coming to you? Have they left a trail of debts behind them somewhere else? So don't be afraid with new clients to get paid up front. Send invoices promptly, another very common thing. A lot of businesses I've worked with over the years, I've done bits of work in credit control, and you go in, and one of the things you see with them is that they might do their work, deliver their job, do their service, and then they're so busy they forget to send out the invoice. Don't send the invoice for 2 or 3 weeks. Now, what happens is if you don't send the invoice for 3 weeks, when your client receives it, their 30 days probably starts then, okay? So you're going to be waiting an extra 3 weeks to get paid. Now, I've come up with a whole list of things here. Credit control is a system a business has in place to make sure that they get paid. So you do need a system in place. That means you need good information. You need an aged debtors report. It'll tell you how much money you're owed and how long you're owed it. Is it 30 days, 90 days? You need somebody in the business dedicated to actually chasing money, to sending out statements, to making phone calls and emails and so on. And I've seen it a lot over the years. You go into a company and they're owed a lot of money and they simply don't have a system in place and they don't have a person. And even if they do, it doesn't get priority, so that they're so busy that the job of chasing money gets left and neglected. What happens is the debtors, which is the money you're owed from your clients, just goes up and goes up and goes up, which is not a good position to be in, because the longer money's outstanding and owed, the less chance you have of getting it. Now, the best credit control people I've seen, this is the people who will chase the money you're owed, are firm, friendly, and fair. Okay, they're firm, they're persistent, they will keep after you, in a nice way. They don't get emotional or angry or whatever. And that's the type of approach that I think works best when you're chasing money. They do it daily. A lot of firms do it weekly. Some people will do it daily, but the frequency, you need to do it as often as you need to get paid. Age receivables report, which I mentioned earlier on. If a business is owed, say they're owed 80,000 euros, this will list all the clients that owe them the 80,000, and it'll put it into categories and columns. You'll have 30 days, that'll be what's invoiced in the last month. 60 days will be 2 months ago. 90 days will be 3 months ago. And then the last column is greater than 90 days. And unfortunately, I've often seen it that a company's owed 80,000 and 50 or 60,000 of it will be in the plus 90 days plus category, which means it's owed for 4 months or longer, which is not a good position to be in. And back to the credit controller for a moment. So the system that I've seen work really well is the credit controller will send out the invoices. They'll also maybe send a statement at the end of the month to remind the client if they're giving 30 days credit. If the money doesn't come in by the Wednesday, maybe the Friday, the following week. So first week of the month, the money is now owed. They will get on the phone and talk to the client. And what they'll do is they'll make a note. They'll make a note and they'll look to get the client to agree the next action. Now, if it's, oh, we're doing a payment run on Friday, we will send out the checks or we'll do the payment online. The credit controller will make a note of that. The next week, if the money hasn't come in by, say, the Tuesday, they will be back on the phone to that client. Well, and all they'll be doing is they'll be repeating the note they made. When we spoke to you on Friday, you were doing a check run, promised to get a check. We haven't received it yet. What's the latest update on that? So you get them to commit again to an action. And you keep doing that. And this is where the squeaky wheel gets the oil, okay? Because you keep doing that and sometimes the client will go, they're just going to pay you to get rid of you. And it's the persistence that will often help you get paid. Now compare that with the company that doesn't have the system in place, they don't have the credit controller, they're not making the phone calls. Are they going to get paid by that person? Probably not. Certainly not as quickly as they could be. So squeaky wheel gets the oil. A lot of Sage and QuickBooks, a lot of these systems now, these software accounting packages can automate the statements. So they can send, you can set it up so they'll send a statement on the 28th day of the month. If the money is owed on the 30th, send a statement and a reminder. You can set it up that if the money isn't paid by, say, the following Friday, it will automatically send a reminder. And that's a good system. Now, sometimes you need to complement that with a real person making phone calls as well, but it can help. It's all helping remind the client about the money that's owed. Credit limits are where you put in a certain amount that the client can't go over, their account can't go over. I remember doing this with a wholesaler once. They were supplying menswear shops, ladies' wear shops, and they the average client would order 1,200 euros worth of goods. So in January they'd order 1,200, and I was looking at the age of debtors. In February they'd order 1,200, and in March, and I was looking at it going, well, if they're ordering again in February, they must have sold what they got in January. Okay, so we put in a credit limit of the average monthly order. So if it was 1,200 euros, the person ordered that in January, the credit limit was 1,200. If they came along and tried to order more goods in February, they'd be told, oh no, you must pay your account before you can order more goods. So again, it can be quite effective tactic. And of course, you can block the account. If somebody hasn't paid you and it's gone way over, why would you keep supplying them? You have a bit of leverage here. If they need your product or goods and they haven't paid you, you just put a block on the account. Nice, again, you're nice in a nice way. You say to them, you owe us for the last 60 days. You're looking to order more goods. You need to clear your existing balance before you can place an order. Again, very reasonable. Now, as a kind of last step, sometimes if you've gone through all your process, the credit controller has been chasing somebody, they haven't paid you, what can work quite well is that you send a solicitor's letter, and all you're doing is threatening to take it on to the next level. And I've seen cases where, I remember one client was owed by about 12 different businesses owed him money, and we sent out 12 letters, and I think 7 of the people paid within a week. Okay, so it can be an effective way. So they're just some of the steps. Getting paid your money quickly is hugely important to make sure that your bank balance stays healthy, that you can pay your bills, and that your business can continue to thrive. Okay, thanks for listening.